Welcome to this tutorial on how to analyze a stock. In this video, we will be discussing 10 steps that you can use to evaluate a stock and make informed investment decisions. Step 1. Understand the company's business model. This step is crucial in understanding the company's revenue generation and its long-term sustainability. By understanding the company's business model, you can get a sense of its competitive advantages, revenue streams, and potential for growth. Look for companies with a clear and sustainable business model and a competitive advantage that sets them apart from their peers. Avoid investing in companies with weak or easily replicable business models. Step 2. Look at financial statements. Examining the company's financial statements, such as the income statement, balance sheet, and cash flow statement, can provide a detailed understanding of the company's financial health and performance. Look for consistent revenue and earnings growth, healthy margins, and a strong balance sheet. Avoid companies with poor financial performance or high debt levels. Step 3. Analyze financial ratios. By using ratios such as price to earnings, PE, price to sales, PS, and debt to equity, DE, you can evaluate the company's financial health and compare it to its peers. Look for ratios that are in line with or better than industry averages. Avoid companies with ratios that are significantly worse than industry averages. Step 4. Look at earnings and revenue growth. Evaluating the company's past and projected earnings and revenue growth can help to identify companies that are growing and have strong potential for future growth. Look for consistent and strong growth in earnings and revenue. Avoid companies with stagnant or declining growth. Step 5. Look at the company's valuation. Comparing the company's valuation to its peers and the overall market can help to identify if a company is undervalued or overvalued. Look for companies that are undervalued relative to their peers and the market. Avoid overvalued companies. Step 6. Check the company's dividend history. Examining the company's dividend history and current dividend yield can help to identify companies that have a history of paying dividends and have the ability to continue paying dividends in the future. Look for companies with a history of steady or increasing dividends. Avoid companies with a history of decreasing dividends or no dividends at all. Step 7. Look at insider trading. Checking if insiders have been buying or selling shares recently can provide insight into the company's future prospects. Look for companies where insiders have been buying shares. Avoid companies where insiders have been selling shares. Step 8. Check analyst ratings. Looking at what analysts are saying about the stock and their ratings can provide valuable insight into the stock's potential. Look for stocks with a high number of buy ratings. Avoid stocks with a high number of sell ratings. Step 9. Check the company's technical indicators. Examining the stock's chart and indicators such as moving averages, relative strength index, and Bollinger Bands can help to identify trends and potential buying or selling opportunities. Look for stocks that have positive technical indicators. Avoid stocks that have negative technical indicators. Step 10. Check the company's news and press releases. Staying informed about the company's recent developments, news and press releases can help to identify any potential risks or opportunities. Look for positive news and developments. Avoid negative news and developments. By following these 10 steps, you will be able to make more informed investment decisions and have a better understanding of the stock you are analyzing. Remember, always do your own research and consult with a financial advisor before making any investment decisions. Thanks for watching.